And that sound means we are live here on our YouTube channel, our daily stock market show where we break down the indexes and commodities and the dollar and stocks in the news and all the different headlines and kind of show you guys how to do your daily routine here at Tackle Trading. Got Matt, got Cody, got Tim here today. Matt, how are you doing?
I'm doing really good, Tim. Excited to be here with the team to break down kind of what to expect in the market this week and get everybody ready to rock and roll.
I love that trend line you have. Beautiful trend line. I mean, that's the market right there. It is on an upward slope.
I got a little lucky on that trend line, though.
No, you nailed it,
I got
dude.
a little lucky on that trend line.
You drew that before it came down and hit that price.
I did.
Yeah.
I drew it last. I was breaking down the horizontal vertical support levels, I want to say last Wednesday in the halftime report. Drew that line. I was talking about how, the vertical support levels and nothing to really panic about until we see support get violated. And we haven't done that yet. I think you got to have a good rating in the S&P this week in the newsletter, though, T, right there at 45. And that's kind of what we're looking at right now. Slight edge to the bull side, I would say, but it's just very, very slight.
Well, I mean, in most market conditions, you're going to have a slight edge to the bull side because markets normally go up more than they go down. But we've obviously got concerned risk here as well, Matt. That's why it's not too much far further than the 45 because you've got resistance, which has failed to break out throughout the entire summertime. You had the pressure last week, which brought the market down below very, very short-term support at 29.40, 29.50. So we're testing both sides of this range here. Fairly neutral, 45-yard marker on the S&P. I mean, that's the way I'm seeing it right now. We're heading into the fourth quarter. We're heading into earnings season. There's so many things in front of us that the market is trying to figure out before it takes a direction one way or the other. Interesting.
And quite frankly, I think that one thing the market's trying to figure out is going to be all over the headlines this week. And, it's going to be difficult this week, in my opinion, to not overreact to headlines. That I think that's one thing that's going to be kind of play tricks on us a little bit because you have a bunch of Chinese-U.S. trade talks going on the entire week. Now, the major players in those discussions aren't really kind of coming in till Thursday and Friday, but you are having, lower level negotiations happening on Monday through Wednesday. And, the headline today was basically, Trump wants a complete deal. He's said that many, many, many times. He doesn't want to sign a partial deal. He wants a complete deal here with the Chinese, and the Chinese indicated today that they're probably not going to give him that complete deal on a lot of the, discussions such as regulations over the industrial, how China uses their industrial marketplace and their how they get US IP and how soft dollar cost and all that jazz. So I don't think a complete deal is going to come, and I just don't see that happening this week. But we're going to have headlines both positive and negative, and we're going to have to navigate those.
Yeah, there's no doubt about it. That U.S.-China trade deal has dominated headlines now for 18 months, and it doesn't seem to be going away anytime soon. We'll talk a little bit more about that as we go through the markets here today. Quick look at McDonald's, if you will, Matt. I just want to reference something and give a shout out to my brother Mark here. The McRib is back, and he had about 20 of them over the weekend, I'm sure. Not exactly affecting the price too much, kind of a neutral chart.
He's probably buying a ton and putting them in his freezer. He's probably doing that.
It wouldn't surprise me. It's insane. It's silly, but it would not surprise me at all.
It's his thing.
I wouldn't eat one if he gave one. Listen, I wouldn't feed it to my dogs, and that's the truth. I would not eat a McRib. It's not real food.
I might have to do it just to support him on this journey. One time. I'll do it one time. But no, the McRib is back, and that's why McDonald's is up, and that's the best analysis you're going to get today.
That's pretty much it. I mean, really, really simple one there, but obviously it was in our Tackle Today blog, and Christian wrote about it, Mark wrote about it, and it's obviously a running joke inside Tackle Trading. So support Coach Mark out there if you're a McRib fan, no doubt about it. Back on the Dow, the NASDAQ, and the Russell here real quick, Matt. Just give me a quick look at all the indexes. In my opinion, there's not that much difference between them except for the Russell, which has been true all year long. Tell me what you're seeing on the Dow and the NASDAQ.
Well, and on all of the indexes, they're all doing the same thing except the Russell 2000, and it's right there in the middle of the trading range. So if this is kind of your zone that you're looking at, this support zone that we drew last week, and then you have the horizontal resistance between 3,000 and 3,030, you're stuck right there at 29.50, and that is right in the middle of the range. You got a cluster of moving averages right here as well. And so I could see a tremendous amount of things happening this week, and I do believe it's going to be a stock picker type week where you're going to have some stocks that, will be bullish and some stocks will be bearish, but I don't see a lot playing out this week in the market. I think we'll see some up, we'll see some down, but I don't believe we're going to see a strong directional move this week in the market unless we get some degree of clarity out of the U.S. Chinese trade talks. And I just don't believe we're going to get that.
Yeah, I'm the same way as well. And the reality is, guys, that should not impact your day-to-day actions you have in the market, except for your strategies. In a week like this, Matt, I'm going to be looking for Vega build into the earnings season. There's a lot of those things you can do.
Yeah, let me talk about that for a second, Tim, because I felt Coach Noah over there tackle trading, and if you guys viewed and read the options report, go ahead and let me know what you thought about that options report this week, because I read this option report yesterday, Tim, and it's something I've seen many, many times in my trading life, but I just absolutely loved what he did this week in the options report, where he basically broke down you were just kind of talking about the types of strategies you go through the market, and Noah did such a wonderful job of saying, okay, in a bullish option strategy selection, when you have a high IV rank and this is your bias, these are the types of strategies that you want to apply. When you have a low IV rank in your bullish option strategies, these are the types of options that you want to, strategies that you really kind of want to focus on. And then he obviously did the ones on the bear side as well, given the bias, given the types of strategies. And I just felt like he did such a wonderful, wonderful job in helping people understand that when you're a positive one bias, this is what you should be doing. And I do think new traders make some mistakes here when they first start learning how to trade, and they start learning how to buy call options, and they start learning how to, buy put options, and that's all they do, right? But yet the market's not +3, and the stock's not +3, and the sector's not +3. It's, the sector might be +1, and the market might be neutral, and they're going out there trying to be aggressive buying call options, and that's a difficult way to make money in the marketplace when you're not matching the strategy versus what you're trying to accomplish versus what your bias is in the marketplace. So if you have not yet watched the options report and read the options report, make sure you do it, because even as a veteran trader, Tim, it was a really good reminder that, hey, Mr. Matt Justice, when you're +1 on a stock, don't be buying call options. Look at a bull call spread instead. You know what I mean?
You've got a student down in Houston, Texas. I can't remember his name right now, but I loved his answer when I brought him up in front of the room once when I was teaching in Houston. I'm like, what do you love to do? And he's like, I'm just like Matt, long calls. And I'm like, all right, back down a little bit here. And his wife,
that's my Texas boys.
That's right. And his wife's like, no, listen, we're going to be doing naked puts and covered calls, and we're going to stack beta. And so they have a good balance together. There's no doubt about it. You can't long call your way through the market forever.
No, you can't print your way out of debt, and you can't long call your way into the market for riches.
No. I mean, Delta does play a role, and Delta does serve a function in your account.
It's always important to realize that when you're buying options, Tim, they're inherently overvalued, right?
Yeah.
And so that's going to be a very difficult thing when you're not matching your bias to the strategy, and they're inherently overvalued in the first place. That's not a winning proposition long term.
Hey, Matt, Tim, of course, y'all seen the video where I know that both of y'all play World of Warcraft, but the one where they're all trying to meticulously plan out this like invasion where they're all about to go in, and they're taking their time, exactly what they're doing. And the one guy just runs in.
Hold on.
Leroy.
Yeah, you could
Jenkins.
Okay, trying to call options the market every single time.
That's Leroy
jinxing your account. You're going to screw everything
what do I do?
up everyone.
Yeah. In fact, with Tim, when you're like long call, that's Leroy Jenkins. Tim asked Leroy Jenkins what he likes to trade. Long call on bearish stocks.
First of all, I'm gonna go watch that video when we're done with the halftime report. It's funny. It's one of the funniest things that happen online.
Even if you're not a gamer, the reaction is amazing.
Oh, my wife knows about Leroy Jenkins. She never played World of Warcraft, before, and it's like that's a funny thing. There's no doubt about it. But that does feel like a new trader sometimes when they're like, got to get in the market, long call, let's run and roll. I don't want to take the time to plan out my account or any of those kind of things. They kind of rush it, Matt. I do see that quite often. Mistakes new traders
running in without a plan.
Yeah. Yeah, it feels like a
Yeah.
bad strategy. There's no doubt about it. It does
At
remind me
least,
of.
at least he was motivated. Okay.
Feels like me when I made my first trade and I had $2,000 in my account. I put $2,000 into call options on an earnings report.
I got an email from one of my students, Matt. I'm going to tell
Might
you
as well
about
just put on black, Matt, at the
Oh, it was
roulette.
terrible.
everything on
It was my
black.
first. Hey, Cody, how was your first trade, buddy?
Hey, my first trade. Well, my first trade went fine. It was my first portfolio that didn't go fine.
Was that the one we designed on the napkin at the?
No, that was my
No,
second.
no, no.
And
That was
one's
your
still
second
going.
one.
My
Yeah,
second
that was
one
still rock. I was
yeah.
gonna say because that design I did on that napkin was epic, buddy.
Yeah.
For those of you that don't know, when I met up with Matt for my mentorship, we went out to Buffalo Wild Wings and he designed out my entire portfolio on a napkin at the bar at Buffalo Wild Wings.
It was fantastic.
And then it's still like, I gotta see.
That's your portfolio design? Do you have the napkin?
We built it on a napkin. I gotta see if I can
Yeah.
still find that napkin somewhere. But
That's
yeah,
awesome. That's
Yeah.
awesome.
It was
it
awesome.
started there. Of course, we got back to the house and went through all the meticulous stuff. But he was just giving me the broad design, like, all right, here's what your portfolio is gonna look like, and he draws the circle. And
Are you still running the same type of portfolio today, or is it evolved?
Yes, I just split it up to where it's not all through one account.
I see. So it's kind of the rough sketch of what you've used now for years, and you've adapted and evolved and grown it into the way that you trade now today. Is that right?
Exactly.
It's amazing. Get the framework in place. There's no doubt about it. And then you can grow through the markets as you learn. I had a student I mentored a couple years ago, Matt, who's active halftime crew, here almost every single day. Won't mention his name, but he had sent me an email over the weekend. He basically said, Tim, for the first year after our mentorship, I successfully theta traded. That's all I did. Theta, 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 theta. Naked put, cover call, iron condor, that kind of stuff. He said, but the last year or so, I've adapted to where I am a 70% Vega trader and I just play earnings, and it's really amazing to me. Cody, I actually think your experience where you trade the same design for a couple years is probably common, but I don't think it's uncommon to see traders adapt and change even after they've gone through mentorship.
Absolutely.
Hold on. Doesn't it depend on how good the design is?
It depends, maybe, but even a good
He's trying to
design.
prop himself up a little bit.
Come on.
Let me tell you
Tim,
one thing.
Tim didn't want to give me that one. He just
No.
You know what?
Because
on that napkin, which is now the main thing I trade, Forex. Forex was not on that napkin. So I've already changed and adapted it, and I do more Forex trading, especially when I'm day trading.
In terms of active, yeah.
But as a passive account, you don't need much more than simple strategies.
I think so. I like it as well. And it does come down to trader style. I will say that. I mean, not everybody's good at cover calls. Even if it's a strategy that works and they have the rules that work, they may not have the personality to execute them. I've seen that in my career. Not everybody's good at day trading.
Well, they need to get over that.
Well, I mean, it's just sometimes personality.
No, they just do. There are certain strategies in the market you got to get over.
Yeah.
The people that don't like to do cover calls are the people that don't want to cash flow 2 to 3% every single month and compound gains.
Yeah.
If you're not doing cover calls, you're making a mistake.
I think so. I think they're wonderful for retirement accounts and trading accounts alike. Guys, headlines here today, U.S. China, trade talks underway. China's coming to the U.S. There's all this expectation and talk that they're going to push back a little bit on Trump. Do you think maybe some of the politics we've seen in the headlines recently, which we're not going to get into, are affecting this U.S. China trade negotiation, Matt?
I'm not sure. I mean, it's an easy analysis. And sometimes when it's easy, it's lazy analysis to say, okay, China is going to change the way they approach this trade negotiation now that there's impeachment talks, right? I don't believe anybody in the world thinks Trump's going to actually be convicted in any type of Senate trial. I mean, Mitch McConnell was literally putting out a fundraising campaign video talking about how he's going to stop that in the Senate. So I'm not even sure there's going to be articles of impeachment drawn up here, let alone a trial in the Senate, let alone a conviction with 66, 67 senators. So I think it's lazy analysis to say now that there's impeachment inquiries going on in the House, all of a sudden China is going to go around and just change their negotiation that they've been doing for the last, say, 18 months. I think they're playing the long game. China thinks in terms of dynasties. We think in terms of quarters. So I think they're playing the long game here. And I think they're going to, I don't think we're going to get a trade deal because I think they're going to wait out through the election. And I think the impeachment inquiry has nothing to do with it.
Yeah.
I just want to add to that real quick because it's something that I don't think most Americans understand. is right now what we're hearing, like impeachment inquiries. There's a formalized process written out in the Constitution how impeachments are supposed to go. They haven't started that. So everything we keep hearing is it's kind of just kabuki theater right now until they actually start those proceedings. If that does, then I might get interested. Right now, meh.
This is a court case, and they're doing discovery, is what they're doing.
Yeah.
They haven't even sent it to the grand jury yet. So to indicate that China
they haven't even
is
written
changing,
up what the articles
has nothing to do with that.
They have nothing going on until that happens. Meh.
Yeah.
Mm-hmm. Yeah, I agree with that. We're going to see more throughout this week, obviously, as they do come, and we're going to see those headlines come in and pop in and maybe create some volatility. I was looking at the economic calendar and thinking about the week, Matt, and I'm kind of cautious because this seems like a week where nothing should happen. So that's my expectation. Neutral moving through the week. You got Fed test. They literally put Fed Chair Powell speaks right there today. He's giving the introduction to a movie that's coming out about the Fed. How is that a red?
I said that in the Forex report. I was like, what does this matter?
Because it matters, because if Chairman Powell farts in an elevator in New York City, it moves the currency. Okay?
Well, he's in Salt Lake City.
That's why it matters. But outside of the normal Fed chair individuals speeches we're going to get this week and the normal nonsense that they're going to tell us, you do have some very interesting economic reports this week that we do need to track. Number one, inflation is one of the things that the Fed focuses on to make their determinations for interest rate policy. And I think what is the latest trader's expectation for a Fed cut next in 3 weeks? Is it 70% right now?
It's increasing.
Yeah, it increased from last week. I believe it is. I think it was under 50% last week.
I mean, it might have inverted like 3 times. I mean, we saw that in one day.
It's amazing. It's amazing how much they've flip-flopped on this. Like I tell the joke all the time that people think politicians are the worst flip-floppers. No, traders are the absolute worst flip-floppers. We'll go from bearish to bullish in a heartbeat. But I do believe it's at 70% this week. And there's a lot of the Fed speeches we've been hearing is, hypothetically this and hypothetically that, but it really boils down to we're still gathering information, we're still gathering data, we're still data hunting. And so you have a couple economic reports that's going to play a role in those types of decisions for 3 weeks from now. And the first one here is you got the core PPI report, which is the producer's price index. And then following up on Thursday, you got the core CPI report, which is the consumer price index. And then I think one of the most important economic reports we get on a monthly basis right now is the one thing that's really kind of holding this house of cards up for a second, because growth is non-existent right now. Earnings per share growth is non-existent. We're seeing growth just get evaporated from around the world. What's been holding the markets up? Consumers are still happy. So consumer sentiment report on Friday is going to play a role here as well. And Tim, we saw this last week. Remember, most of the time, these reports come out and nothing happens until you see an ISM non-manufacturing report that comes out at 47.6 and the market goes down 4%, right? Mm-hmm. So that's why these things are important. Most of the time they don't have that big of an impact, but this week, given the increased sensitivity to what's happening from an economic perspective, I do think we need to track these economic reports a little bit more closely this week.
Well, what's really interesting at looking at the Fed Rate Watch tool, when you brought that up, I instantly went to the website on the CME group, that tracks that. And a week ago, Matt, the expectation was only 39%.
Yeah, I was going to say it's close to 40, I thought.
And it went up to 73%. And so really the question would be, what happened in the last week? You had bad economic data.
Bad economic data.
And so bad news is good news in a weird topsy-turvy market we live in, because the bad news now makes the Fed cut rates.
Well, and Tim, it was bad economic news last week, could be bad this week too, but European economic data that's came out the last couple of days is atrocious, is absolutely atrocious. German factory orders decreased by 0.6% year over year. I mean, these things are getting worse. They're not getting better.
Yep, I agree with that. By the way, I just tweeted out the link to that Fed Rate Watch tool. If you guys are interested, follow me on Twitter at TimJusticeUtah, and all the tackle trading crew over there on Twitter as well. A lot of us who are active over there, Matt, that's where we put a lot of the information out about the markets more regularly.
Gun to head, do they cut in 3 weeks?
No, I don't think they will. I think you're going to see a lot of mixed situations. And by the way, they just cut in September. The plan wasn't to cut every time they meet.
No, they lie to you.
Are they going all the way to zero directly without a pause? They could. I don't think they will. I think that this is kind of an overreaction. They did cut in September. You had a mixed panel vote in September, Matt. There were Fed officials who publicly came out and said we didn't want to cut in September. So I think maybe they take a break here and maybe cut in December if they need to. But they're on a quantitative path.
I disagree with both of you because I think the whole reason they were rising in the first place was so that they could have the ability to cut in a downturn. And the only reason we started cutting,
they were raising it to try to normalize the debt crisis.
They're trying to add in and correct what previously screwed up. And
can I explain that real quick? Real quick, the debt crisis, what I was talking about. Yeah. Ever since the beginning of this country, we've had debt, right? You've had debt expansions and you've had debt contractions. Okay. Ever since the beginning of this country, from the time we funded the Revolutionary War up until 1936, when Jackson paid off all of our debt and basically and killed the first central bank. And we had basically an economic, pretty prosperous situation all the way up until 1907. Okay. And you had debt expansions to pay for like wars and economic problems. And then after the economy was over, you had debt contractions. And that has lasted all the way up until the 1980s. Even in the 1930s, you had your debt explosion to pay for the Great Depression. You had your debt explosion to pay for World War II. But then from the 50s to 60s to the 70s, our debt to GDP ratio actually came down. And it was multiple Republican presidents, multiple Democratic presidents, all kind of coming down on that debt cycle. And then Reagan comes in, just blows up the debt to GDP ratio, basically to pay for the Cold War and to win the Cold War. It was an economic war. And then even after that, Clinton and Bush brought that debt cycle back down to 30% to GDP ratio. Reagan got it up to like 50%, I believe. But from what Bush did, we increased that debt cycle back up into 50% to, the war on terror and coming out of the, .com crisis. And then Obama comes in and there's no attempt to pay down the debt cycle. Trump comes in, there's no attempt to pay down the debt cycle. And so all you do is have this debt go higher and higher and higher and higher and higher. And so what Jay Powell and Janet Yellen were trying to do back in 14 when they ended quantitative easing, and 15 and 16 and 17 when they're raising interest rates, is they're trying to bring that debt to GDP ratio back down. But because of the tax cuts and everything, the debt just keeps on expanding, and now they're starting to contract. So to me, it's they were trying to cure the problem of too much debt to GDP ratio, because now we're over a 100 to 1. I mean, we're over 100%, which is really kind of a disastrous situation to be in. So
we're 103 right now.
I still believe Jay Powell wants to normalize this, but he's having a hard time finding a way out of it. It's so bad.
Yeah.
Oh, that's exactly what it is and trying to explain that to the common person, that when you add a rate hike and we take a 3% move in the market just after him hiking alone, trying to explain that to someone why his rate hike was warranted is very difficult without trying to go into a full economics 101 lesson.
Yeah. And
actually not even 101. It's like 401. Like we're pushing graduate level.
We're pushing graduate at this point. But, all I'm saying is, from a debt perspective, and why I think we should, as a society, fixate on it a little bit more, is we're paying over $500 billion in interest payments alone, guys. And how debt is supposed to work in the U.S. is you're supposed to finance your old debt by paying it off, by taking in new debt. And now you can't even finance your old debt away. All you're doing is financing the interest, and it just compounds the problem for future generations. So, that's why I get a little upset. Well, I call myself a monetary and a deficit hawk, but, I would love them for them not to lower the interest rate, Tim, but I just believe that the whiny little babies on Wall Street are going to get their way.
Well, they do get their way. I mean, you look at the futures market, this whole thing that they're tracking on the CME group is where they flash it up and down and letting the Fed know what they think. Right now, they're setting the expectation, you better cut rates or else we're going to whine and we're probably going to make the market move. So they're playing that game.
Exactly what they're doing.
Yeah. They play that game with each other. And I think Wall Street institutions, they know how to manipulate the Fed, and the Fed tries to push back and act like a stalwart. We'll see if they capitulate here again in their next meeting. They did last time. So, and
I'm going to say, gun ahead, you say no. Gun ahead, I'm going to say yes, but I do believe they only get one more the rest of the year.
Stocks are flat. We've got some individual companies I want to go through here in a minute, and the
Matt, they only have
sectors.
one more meeting the rest of the year.
No, they got one more.
November,
They got one in
December.
December.
Oh, December, excuse me. I
got
was going to
December.
be like, Matt.
No, they're going 1 out of 2. We're going
Okay.
1 out of 2.
Yeah. All right, dollar pullback pivot trigger here, guys. There's some setups in the Forex markets I do like. Check out the Forex report from over the weekend. There's no doubt that there's a lot of good plays here. The euro dollar cross pair is probably the one that's grabbing my eye the most, Matt. Most liquid setup. But first, talk about the dollar. Talk about Forex markets real quick.
Yeah, these are the things you wait for on the dollar. You wait for the pullback, you wait for the slowing momentum, and you wait for confirmation here. You're sitting right on that 20-period moving average. Obviously, you do have another support level right where the trend line is in this nice little bullish movement that the dollar has had. You got a very consistent 20 and 50-period moving average moving upwards as well. That gives you a good little buy zone, bull zone there as well. But I want to bring in Cody. Cody, you did the Forex report over the weekend, correct?
Yes, I did. And
what pairs? What pairs you looking at, my friend?
Got to go with the main one. There it is. That's the first and most important one that I am keeping my eye on, because you look at the dollar index and then you look at the euro. It's the opposite of the dollar index because the dollar index is so heavily weighted in the euro. But yeah, intraday, I'm looking for that. You already drew it. I can't even get to it fast enough.
1096.
If that breaks,
yeah,
you have an easy trigger to play this in. And I can see it not just coming first target right there at the low. Second target's going to be a little bit further than that. And I talked about all of that and where they're going to be in my video of the Forex report. The write-up, I just did a basic short history of currencies. I thought that was pretty fun.
You know, this is what you see on an intraday perspective when you're seeing those bearish retracements form. You see that consistent higher high, higher low, and then you double top, you double bottom, and the trigger's easy right underneath the double bottom there. I like that. Looks like,
you know, we had to find some examples for the Forex 101, and I was having a little bit of a hard time. But now that this is set up, I might just have to grab this guy because I'm trying to find ones that they fit both on the daily, intraday, like to where they keep showing the same pattern over and over, that congruency between time frames. And this is a very good example. So I might just have to replace the one I did find.
And the only thing it doesn't have is confirmation. So give it a day. Give it a day. You'll get your confirmation. But yeah, and that's another reason when you're trading currency to understand when these economic reports come out, because they obviously have a big impact as well.
By the way, one thing that you'll learn in the step system course, which you've gone through it, you already know the value of it. And if you've not, go through the course, okay, is the importance of a trigger candle and a pivot candle. Map back on that euro dollar cross pair. It was a beautiful doji at that point of change, which is what we want to see when we're looking for a setup. It's not just the fact that it's at the falling 20-period moving average. It's that you got a little doji on it and clear confirmation trigger. If it does sell down. As a trader, we like that. We like clarity.
Well, and you also like cheap risk as well. Right.
Yep.
And just like we were talking about on the entry underneath that 1096 level, you also have a clean stop loss above the 110 level. And I love clean stop losses. Clean entries, clean stop losses are really, really good. It's when you get these ticks up here that make it a little bit more difficult. But when you're looking at this, and again, I'll drop it down into a 1 hour chart this time frame. When you're looking at that, you got a clean stop loss right above that. So I like the trade there.
I like it as well. Crude oil, the energy stuff. Let's go.
Mind you real quick. Okay. You can trade these in the stock market as well with ETFs, the FX crosses.
Always a public service announcement. You don't have to be an FX account trader with 500 leverage to 1 to be able to trade Forex. It's important for every trader, including IRAs, regular accounts, margin accounts. I'm saying, making a point. He was
straw manning the Forex market is what he was doing, and I wasn't going to let him do it.
He was making a jab a little bit.
Only kids recently out of college use the word straw man to try to describe an argument. The rest of us just argue, Cody. It is what it is.
We're Americans.
Hey, if you understand the style of what someone's doing to your argument, you can destroy them easier. So
that's a red herring right there. It is what it is. Crude oil, energy. Matt, let's talk natural gas and crude as well. Crude's actually up nicely, this morning. Now,
told you not to worry about your credit spread, bro.
Yeah, but it's still not bullish. I mean, let's not get too worked up. And it's not out of the woods either.
It's not bearish either, though.
It's neutral.
I mean, don't get me wrong. When you look at the last couple weeks in crude after what happened in Saudi Arabia. Boom, 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 just got absolutely blasted back down. Obviously a massive overreaction to what happened in Saudi Arabia. They were up and running within days of what happened there. So you see that kind of that correction back down to the mean. And Tim, let's take out the gap range for a second based on what happened. Let's say it doesn't happen and crude just kind of doing what it's been doing. Nobody's surprised at it. Nobody's crazy about it. It's because of the swiftness that went from 62 to 52. It's got people all up in arms. But when you actually think about this, it's really just kind of stuck in the range that it's been, in for the course of the last, 8 months?
Yeah.
Right.
Yeah. 50s play defense for sure.
Well, and let it play defense. And that's all I was saying last week in the sell-off is, don't get me wrong. I don't want crude to go down. I got a bull put spread on it. Right.
Hypothetically, let's say you're in that bull put spread, Matt, with the bounce, do you add the bear call, turn it into a condor?
Not yet.
Is this kind of as it's setting up though? I mean, is that the kind of thing that you would do, turning it into a neutral condor instead of a bull put?
No, I wouldn't, because this would be the area on the chart where you would look to enter into a bull put, not a bear call. Yeah. I don't like entering into bear call spreads at support levels. Mm-hmm. That's when I like entering into bull put spreads. I like entering into bear calls at resistance. I just feel like I have a lot more cushion on the range. Sure. From an ATR range. So no, I if it hit 60 again, that's when I would say let's sell bear call then. Yeah,
I think it's early for it as well. Just want to bring it up because that thing from the option report this weekend, which was so fantastic. And in the chat, by the way, always kind of just reminders, go and check out the value in that content. The option report Noah did. You referenced it. We've talked about it. It talks about the different strategies you can play. And one of those things is you do take a bull put. At some point, adding a bear call, making it a condor does make sense. I just think with crude oil, probably a little early for that.
Oh yeah, absolutely, Tim. I mean, couldn't you see crude? Isn't the most likely scenario from a technical perspective on crude for crude to ding into 56?
56 bear retracement, and then go back down and test support is kind of where my head's at. Yeah,
that's where my head's at too. Okay, and that's what I think will happen as well. I think we'll see 56 kind of hit into that resistance level. Crude comes back down, test 52 to 50. And in that range, no, I would rather sell that bear call spread at 56 and maybe get above 66 at that point. But no, I think you're early, or you're way too early on a bear call here.
The rest of the energy market kind of moving up or down 1%. Natural gas down 8%, but still kind of neutral at a range. Check out all of our commodity analysis in the commodity report, by the way. Coach Mark does that each and every week in tackle trading. This one's kind of neutral, Matt. I like the candles on Thursday, Friday, but still kind of neutral, don't you think?
Oh, yeah, 100%. You kind of like it on the weekly chart as well, setting that higher high, trying to find a higher low here.
I have a new
really
hobby, guys.
Tough directionally, though. I wouldn't touch it directionally.
You have a new hobby?
I have a new hobby. It's watching Tim sweat credit spreads on commodities.
Oh, yeah. Sweating a credit spread when he still has 12% cushion.
It is my new favorite thing to do in life.
Yeah.
Are you rooting for me or against me, big brother?
We're always rooting for you, bro.
Dude, we're always rooting for you. I don't root against anyone.
Me neither.
That's what's beautiful about trading, right?
That's a lie. Mark roots against me when it comes to fantasy.
Okay, that is true.
Oh, no. He roots against
I was referring to
everybody
trading.
in fantasy.
That's different. In trading, we all can win. In fantasy football, only I can win.
Yeah.
I won this weekend.
Yeah. My fantasy teams did pretty well, except for my dynasty team. It's garbage. I need to throw the baby out with the bathwater, hit the reset button and start over. There's no doubt about it. But we can talk football another time. Gold, we found the price for gold, guys, $1,500. It wants to be at $1,500. It keeps trading around $1,500. In the last couple months, with all of the chatter back and forth, it goes up, it goes down, it sits in a range. And Matt, here we are. I'm concerned about the short term, not concerned about the long term, but maybe that's why the market's not doing anything, is you've got different time frames of investors who are willing to just kind of hold the price around where we're at. What's your read on gold?
Gold, the dollar's very strong right now. Mm-hmm. And with the dollar sitting at support, I'm a little worried in the short term on gold, but I'm not worried in the long term, right? So I don't expect gold to do much this week because I actually think the dollar is going to have a fairly decent week. Obviously, there's a lot to play into that, and we got a lot of economics and a lot of speeches, a lot of nonsense. But I'm just speaking from a pure technical perspective. with my expectation on dollar appreciating this week, I think gold's going to be stuck in the same range it's been stuck in. I don't expect gold to come down just because the dollar goes up. I don't expect that, but I do expect gold to kind of stay in the range it's been in over the last 4 weeks.
Yeah, it's feeling that way. Definitely becoming range bound between about 1560 or so. I know it hit a pivot there in September, and about 1450, 1460.
I would call it 1450 by 1660.
Yeah, 1560. Yeah, I would agree with that. Silver is also kind of moving back up here in general, but kind of flat over the last month or so, Matt. If I'm cautious about one or the other, I think I'm more cautious about silver right now just because the volatility of that product relative to gold. What's your read on silver?
Well, and you got lower lows, you got lower highs, and silver trying to fight its way back up above this recent pivot here at 1770. So, yeah, I mean, short term, there's nothing to see here on silver. I will tell you that I kind of starting to like the weekly chart here a little bit on silver. I'm not ready to pull the trigger. I still believe we could see some downward movements in price on silver, but that weekly chart's kind of starting to set up a little bit.
I do like the weekly. The concern I have with silver, quite frankly, is that I'm biased. And I worry about that bias impacting my thinking about it, because if that was any stock, Matt, I would see bearishness. But yet in silver, I try to find a reason to get bullish.
But yes, but in short-term downward trends, right?
Mm-hmm.
In a longer-term uptrend with a short-term downtrend, doesn't that usually lead to bullish retracements and buy the dip mentality? And
yeah, it's a perfect setup for position traders. There's no doubt about it. I mean, that's what you want. You want
if it
that
was a stock.
Yeah.
Let's play that game. If this was a stock and we weren't emotionally tied to silver because we like it.
Yep.
I would say on the short term, that is a massive stay away. Those pivot relationships are not good. That there is no swing trade here. Stay away for the short term. But on the weekly chart, I'm looking at them saying, okay, but it had a really good earnings report, and now it's just coming down a little bit. I mean, so a lot of times, not every time, but a lot of times they do represent pretty decent little buying opportunities on those weekly charts if you're looking to pick up, right? I mean, if somebody right now was saying, I'm going to pick up physical silver, I'll be like, yeah, I'll go with you. Let's go do this. Right?
Yeah, I got no problem with that.
But it's different on the paper asset.
Yeah, I agree with that. A lot of companies on the heat map grabbing my eye, but maybe number one is going to be NVIDIA. The semiconductor space has been very interesting the last month or so. NVIDIA is showing me a 2% move when the market is down to flat. NVDA, pop this one up real quick. Little potential in this one, not an entry candle. I think the longer term weeklies and whatnot, they're more interesting to me here, Matt.
Good, you do got some action there on the weekly here, Tim. Obviously, this is one of those stocks that has Chinese, U.S. trade war type situations, but you're starting to see an increase in support level on the weekly chart. On this here, let me get a bit thicker line here, but on the weekly chart also, you got that major resistance area right there in the 190 range that if it can reclaim that, I mean, 200 is a stone throw from there.
Yeah.
But when I look at this on the daily, on the intraday 1 hour chart, Tim, I wanted to bring this up because just to point out something. Technical analysis works.
Mm-hmm.
It works.
Yep.
Okay. There's a reason that the very high of today just so happened to coincide with the very high over here. There's a reason for that, because the robo traders started locking in profit. That's all that happened. But I could get excited on this weekly chart.
I can as well. There's no doubt about it. I mean, it's the kind of company that when it does break out and develop a trend, it can fly as well. So definitely a good long-term candidate. Price tag might price some people out of stock here, but commissions do not, Matt. One of the great things about this move recently with commissions has been that you can buy one share and not have to worry about the cost of the $5, $7, $9, whatever it is. So a smaller account trader now can position size and not have to be too concerned about it, even on the big names.
I think there are huge ramifications for that. Because when in the past would you ever say, I'm just going to go buy a share of NVIDIA or 10 shares of NVIDIA? You wouldn't be like, I'm not going to pay the $5 commission or the $7 commission, or that is, I mean, the ability to position a portfolio.
Yep.
I mean, I think we're just wrapping our head around how awesome that is going to be for small traders.
Yeah. I don't even know how we're going to go about designing portfolios for small accounts, because typically they were mostly option based.
Well, I don't think the market knows how to react to all of this news as well. You look at the two charts on E-Trade and Ameritrade today. I'll give you a really good example of how even the stock market's trying to still wrap its head around this news. Ameritrade's looking ugly. If Ameritrade breaks support, it's a sell, period.
Oh, 100.
Momentum sell, no question about it.
A commission-free sell.
That's right. E-Trade, though, Matt, you would think both of them, we're not talking Schwab here, where we had that discussion last week, difference in commissions. E-Trade on the daily chart just backfilled today. In fact, it might actually look more like a gap fill type scenario, moving upward. I don't know if the market knows what to do with these charts, so play the price action and technical analysis works.
All I'm going to say is they better be real good on their earnings this next week.
Yeah. Well, and it's about what they say as well as what they report, I'm sure, because how are we going to move into the future? How are we going to make money? How are we going to offset the 30% profitability that came from commissions on TD Ameritrade's balance sheet? It's going to be an interesting animal.
If you call it them in, they still charge you a commission, though.
Really?
Mm-hmm.
Yeah.
Yeah.
Well, and there's still an option commission, right? 65 cents.
There's still 65 cents on the option commission. There's nothing on the stock. There's nothing. The one thing I got excited about was assignment fees on TOS sucked, and they got rid of those. So,
yeah,
but there still is a commission per contract, and there still is a commission if you call them in and have them help you with something.
Couple of stocks we got to talk about before we do sectors, Matt. General Electric, GE. I don't know if you saw the news on these guys. They're trying to prepay some of their pension plans and cutting some benefits and this and that. Now they haven't offered a pension since 2012. And I was trying to dig into the news to understand it, because I think they've got this big liability on their balance sheet of all their old workers where they had guaranteed pensions, and they're doing the best they can to buy them out, giving them the money in advance, things like this. I don't know if it's good or bad for the pension holders. I'm not sure. I still got to dig into the news, but I thought it was interesting.
It's kind of a take it or leave it type scenario. So
why do you hate GE so much?
Because they're a shitty company. They lied to the public. They were dishonest. They had deceptive accounting practices forever. They went into business models that they should not have. They lost a bunch of money for their shareholders, continued to lie to them, and then they ended up having to cut their dividend, even though they wouldn't. So I have a lot of reasons why.
On this GE news, do you specifically go out and find GE news when you wake up in the morning?
I think it's the first thing he does.
Because I didn't dive into, Matt, did you dive into GE's pensions this morning in that news?
I have not.
Cody, did you dive into GE news this morning?
No, I did run across
it. Tim's breaking down a thesis dissertation on GE this morning.
It makes him feel good. I will tell you, though, another general, not General Electric this time, but
I was going to bring up GM as well.
I did see GM's news. GM strikes talks are not going good, and it looks like General Motors is down about 130,000 cars and about $1 billion in revenue based on this strike, and it looks like it's going to be ongoing. So obviously General Motors is kind of hanging out, but this is a stay away until we see some conclusion with that strike.
I think both the generals here, kind of highlight a problem between labor and capitalism in 2019. These are old models that they've been working through, and GM doesn't want to play ball with their workers. The workers doing a good thing, trying to stand up for their rights, Matt. And it seems
well, Tim, think about it. Just what you just said on General Electric. The people are trying to fight for their rights, and not GM, but General Electric cut pensions, and those promises, they don't always fulfill those promises. So I support the workers' rights to strike, and I support their legal ability to go out there and protest.
Now, when you say General, what comes to mind first? Is it General Electric, General Motors, or
General Mills?
Or is it the
Dollar General
commercials with Shaq? I immediately think of the General commercials with Shaq on them.
Yeah,
I think General Motors first.
I think General Patton, World War II history.
General Patton.
Boys. That's
you
right.
You do not randomly pick that out of the air.
Oh, hey, very quickly. Also, HSBC is going to axe 10,000 jobs for. You want to talk about shitty companies, Tim? HSBC, shitty company, axing 10,000 jobs. PayPal. I'm gonna give PayPal a golf clap on this one. PayPal is leaving Libra. They're no longer supporting Libra. So they are one of those companies. And also, I heard last week, MasterCard, Visa also may be leaving the conglomerate that Facebook's trying to do with Libra. And both PayPal, Visa, MasterCard all cited government regulations coming down the pike on Facebook. So keep an eye on that. We already talked about German factory orders. The Joker. Did anyone see the Joker here?
I didn't.
I have
But I love
not. I
Batman.
want to so badly though.
Hey, listen.
Apparently it's had did you see it?
I don't care what the haters say on this. That just makes me want to go watch it more.
Exactly. It made me want to take a look at it.
It's probably a great movie. When the haters are like, this is too violent, like it's the Joker. Okay.
And it's rated
Batman's
R.
dark. Batman's dark. It is. It's rated R. We're not saying send your 10-year-old. Okay. It's an adult setting. But the Joker hauled in $93.5 million, beat the estimates, $140 million, beat the estimates internationally. AT&T, they are having a fun day today.
Didn't it set the record for?
It set some record for October for release.
Like all time, like the most grossing open weekend
for an R-rated movie.
Yeah.
Yeah, I don't think it's set for an R-rated because I still believe that's Deadpool. I want to say, but
here's something I don't know.
Deadpool. That's an awesome movie too.
Does AT&T own Warner Brothers or does Time Warner, TWX?
AT&T does.
Is that right?
AT&T owns the distribution rights here. But last, and I want to get Mark and I want to get Tim's take on this very quickly. We talked about it earlier, guys. The entire narrative coming into this earnings, if you think 6 months ago, was we were supposed to start seeing positive growth by the third quarter earnings. That's what the market was saying for 4 straight months, Tim, and at the beginning of the year. And I was like, this is bullshit. This is fake. This is nonsense. They always say this. They always say that decreasing taxes is going to lead to higher levels of XYZ, higher levels of economics. They always say this. But what we're going to see here, guys, we're going to see negative growth yet again in our earnings coming up. That's what I expect. I believe that's what FactSet expects as well, T.
Yeah, in fact, FactSet came out and said they expect a 4% year-over-year decline in S&P 500 earnings in the third quarter, and that is not the narrative we heard all year long.
No, you can't hope for higher growth.
There's a reason I'm neutral, and even though the market is up just a hair today, and we're on the positive 45-yard line on our rankings that tackle trading, there's a reason why I'm still stacking Theta, trading Vega, and keeping my Delta balanced, right? Because I don't know what the market is going to do reacting through these earnings reports. And you've got to double check every company you trade right now. Carrying through an earnings is not something you should do lightly. It doesn't mean you have to hedge everything. You've got to come up with a plan for that. But I'm concerned about Q4 earnings here, Matt. There's no, or Q3 earnings here in the fourth quarter because I don't know what it's gonna do.
Get ready for a lot of this in the halftime report. Us telling you how this company blames the U.S.-China trade war for their loss of growth, as well as a strong U.S. dollar for a loss of growth.
All right.
That's what they're going to say.
Let's play a game right now.
Yeah.
What will companies mention more as reasons their earnings are down? Currency headwinds or the trade war?
They're going to throw them both out there. I mean, that's the easy excuse, right? It's always the easy excuse. I'm going to say trade war, though. I'm going to say trade war will have a slight
currency
edge.
headwinds is an oldie.
Currency headwinds is good.
Like if you don't know what we're talking about, companies are infamous for saying, "Hey, we would have made a lot more money, except the dollar was too strong." Yeah. Like using that as an excuse why their earnings
allowed U.S. consumers to buy more of their goods. But okay.
Yeah. I mean, so like that is just like all the time in these reports.
Anytime the dollar index is above 90. That is their go-to.
It is. And for Matt to say that they're going to mention the trade war more, that's actually an outside bet.
It is. I think I'm getting odds here. I think I'm plus 150, Mark.
Yeah, no, I'll stick with currency trade wins.
180 minus 180 on the currency headwind, plus 150 on Chinese trade war. But I think the Chinese trade war is so in the news that they're going to use it more. But it's going to be close.
I just looked up top mentions on earnings reports, and Donald Trump is brought up 22% of the time. So maybe they're just
trade war,
president and politics, and the
that's all trade war.
Other people are always the problem.
I'm going to say they're going to cite global economic slowdown again and bring back the European recession. If I have to take one of the two you just mentioned, I'll say trade war. They'll cite that as the problem. Currency headwinds. The dollar's not up extremely this year, is it? I mean, we're still at 99. I know
it's when it's bullish. That's what they say.
Excuses.
Publicly traded companies hate the dollar. They hate it.
Take accountability for your earnings, guys. Don't just cite economics. Come on.
Yeah. Get a better business model.
Yeah.
How about that? How about that?
You know, Matt, sectors that tackle trading, I'm just going to tell people go watch the newsletter. You know, the reality
maybe they should follow Cody and the Forex report so they can make money on their Forex trading. Maybe
That's right. Do that. They should do that as well.
Instead of complain.
I will mention two notable sectors that we've got on tackle trading ranked here. XLE, energy. You know, even though crude oil, we're neutral. As coaches, we were most concerned about this chart here, Matt. Got a negative 40 ranking. It's one of the more bearish ones we have in that space.
It could get uglier. It could get uglier.
If it breaks support, there's a lot of opportunities to sell.
Yeah, it could get uglier here on the weekly chart. So keep an eye on that in the energy space. I'll tell you the space I'm still looking at is your three defensive spaces, Tim. Looking at consumer staples, and yes, there are only three defensive spaces in the marketplace as categorized by the S&P 500. That would be consumer staples. Still feeling like it wants to break out of that 62 handle. Keep an eye on this sector. If it does break out, that would be a pretty good area to focus in on the short term. XLRE, very similar to what we're seeing in staples. And then the highest rated sector for a very long time now at tackle trading is the utility space. It had a beautiful, beautiful retracement last week. Kissed off the 20-day with a hammer, big upward movement in price on Friday, and you got quite a bit of stocks, like take Southern Company, for example, that are threatening pretty decent little breakouts. So obviously they have not triggered yet, haven't hit our triggers that we're looking at, but keep an eye on that utility space as well. Good little safety if you're looking for it.
Yeah, and I will give a drop and a pitch for our reports. The option report this weekend. Team Tackle, if you've seen it, you already know how good it is. I mean, Noah did an amazing job writing it up and the video and the whole thing, but I love the picks too. I mean, that's the value is not just in the content, it's in the quality and all the different picks that go into it.
I was down in LA Teach for Legacy this past weekend, and you know, we were doing a mock design of a portfolio, right? Where we were doing covered calls and, you know, some credit spreads and some step method system type trading. And I was like, okay, as we designed all these covered calls, we designed these credit spreads, and then we were doing the swing trades. I said, okay, based on this design, guys, based on where we're at in the marketplace, okay? And I was walking through the newsletter and how, you know, we have it right at the 45-yard marker. That kind of tells me that I need 3 bullish trades and 2 bearish trades in this portfolio based on the design we were doing, right? And I said, how are we going to find those bullish trades? And how are we going to find those bearish trades? And everybody's like, I don't know. And I pulled up FinViz and I said, okay, I invited one of my students to come into FinViz, and I was like, okay, now you got to click on some buttons, go click on some buttons, go find some stocks. They're like, this sucks, Matt. I'm like, yeah, I know. So here's a report. Here's one of our reports. Let's go through these analysis. And all we need to do is pick 3 trades on the bull side, 2 trades on the bear side. And we found the 3 ones we liked on the buy side. We found 2 we liked on the bear side. We placed the trades. Boom. It took us in all 5 minutes. That's the power of the scouting reports. We're not trying to tell people what to trade. That's not what we do, right? We're not advisors. Okay. We're just a bunch of traders. We're in a community, but they are a wonderful watch list to work off of. Wonderful watch list.
Yeah, 100%. I mean, you know, I had a question in email from a student that I met just about 4 months ago, brand new. And first couple months, she was really active, making a lot of progress, up and running, you know, doing everything. Then she took a couple months off, work got busy, life happens. We've seen this a million times. And she's like, Tim, how do I get back up and running? And I'm like, it's very simple, you know, show up to the halftime report every day because we go through the daily routine. You got to build a daily routine, and we're showing you how to go through the markets. So you can easily just watch this video. Learn how to do top-down analysis, Matt. The 7-step course we have on tackle trading literally walks people through a 2-hour video course. It's a free course right on the main page that you can start. Learn how to go through that, you know, and then use the reports to actually apply those 7 steps.
Yep.
There's candidates each and every week that we've pre-qualified. Here's these 7 steps.
Well, and if you haven't started doing covered calls yet, then Tim, go watch the wonderful video course you did earlier this year on the Tackle 25.
And that's it.
So,
I mean,
but I would say if you've ever left and you're coming back, and I mean, you've left trading for 3 months, 6 months, life happens. It happens to all of us. Start with the 7-step guide.
Yep.
Then watch step system. Then watch the Tackle 25. That's the 3. And in the meantime, the hardest part is getting back into your routines.
Yep.
And that's why you show up at the halftime report so you can start working on your daily routine, and your weekly routine starts on Saturday and Sunday with those reports.
Such an important lesson there. Routine is everything in life, which, by the way, we are done. Our routine on the halftime report goes 45 to 60 minutes, mostly 60 because we're long-winded, Matt. I don't mind it.
I don't mind it. I like hanging out. I like hanging out with the crew. But we got a good podcast coming out today, guys. Obviously, we're going to do the normal market skyline we do in the pod and talk theory, and we go into a little bit more of the political side over there as well at Trading Justice. But we have a wonderful book we are reviewing today by Jim Rickards, and that is Aftermath, where he talks about, in his previous books, he lays out his economic argument. And, what I love about Jim's book, Tim, is he lays out so much history, right?
Mm-hmm.
And even if it's a review for some, it's still a really good review. And for those of you who aren't familiar with debt cycles and monetary policy history and what has led to the crisis that we're currently in from a debt perspective, a monetary perspective, he does a wonderful job laying out his the economic and the central banking argument. And and then he talks about, okay, these are the things that you need to do and be prepared for to not only survive, but maybe thrive in these type of economic conditions. Because even in the worst of economic conditions, even in stagnation, even in inflation, there are people that thrive and people that don't, right? And so there's some things that obviously his pump on gold, obviously I agree with that. And, but it was a fascinating read. And I look forward to talking to Mark and Cody and yourself and Jessica on the podcast later today. So definitely check that out when we release it later tonight.
I agree. Awesome job, guys. If you're still watching.
If you're new to Tackle Trading or want to know more about the site, we have a onboarding session every Monday night at 8:30 Eastern, where Coach Frank does a great job walking new students through Tackle Trading. A lot of material on there, a lot of features we have at Tackle Trading. And that onboarding session, which is open to everyone, Frank walks through the different features, helping people become more familiar. We hold that every Monday night at 8:30 Eastern.
Yeah, and you can access that just on the main page of tackletrade.com as well.
Yeah, for sure. There's no doubt about it. Good job, Cody. Good job, Matt. Good job, Mark.
Good job by you
for popping in here. And we will see you guys tomorrow in our halftime report. Like, share, subscribe, sign up for pro membership, all the things we always say. Just join our community, be a part of our team. We'll see you guys tomorrow.